Do you want to enter the top trends in stocks and futures when prices will rise sharply for more than 4 weeks? You can achieve this with the flat-based pattern. In this video I will tell you how to identify the flat-based pattern on charts and how to use it correctly. The flat-based pattern is one of the most reliable patterns for stocks and futures. It is formed when stocks or futures have stagnated prior to a major trend move. Hi, I'm Michael Exman. In this video you will learn what the flat-based pattern and its components look like, what steps are made by institutional investors, in other words, big capital, when this pattern is forming, and how to be on the smart money side rather than follow the crowd. How to identify that big money is actually in the game and intends to move the stock or futures value upwards. I'm about to share my own powerful analysis technique with you, where the optimal entry point, stop-loss values and profit target are, plus additional pro tips and real-world market examples. First, let's outline the flat-based pattern. The main part of the pattern is formed when the stock or futures price moves sideways for several weeks. The price reaches a certain level, reverts and reaches a certain level again, then goes up again. Thus, the upper turning points form the pattern's upper trend line, and the bottom turning points form its bottom line. This means that for at least 4 or 5 weeks, the stock or futures price moves in a certain channel, thereby forming the flat base. When this formation is identified, we can expect a breakout and consequent movement if certain other conditions are met. But at the very first stage of the flat-based pattern formation, we have to see the uptrend. Flat-based formation occurs after this uptrend, when the stock or futures price drops a bit and stays at that level for at least another 4 or 5 weeks before starting to move up again. The point is that starting from a certain level, institutional investors buy stocks from uncertain investors. At the same time, due to market conditions, the stock or futures price cannot rise above a certain level. When big capital is actually in the game, this stagnation may result in an upward breakout on high volume and a consequent rise in price. The key point here is actually the high volume on the day when the price breaks above the upper trend line of the flat-based pattern. This is one of the indirect indicators suggesting that big money is going to increase the stock or futures value. The entry point is slightly higher than the highest price during the flat-based formation. Don't forget that increased volume during a breakout is a prerequisite, and remember that when we trade any technical analysis pattern, our goal is to enter as close as possible to the breakout level. The entry range is within 5% above the trend line. Anything higher is risky. Placing a stop depends on your level of risk tolerance. It may be a point below the lowest price reached during the formation, or you could place a stop at the break-even point to reduce the risk to zero. However, the price may move back down for the retest right after the breakout, dropping just below the upper trend line before it rises again. As in any business, experience is needed here. In the second part of this video, I'll use real-world market examples to show you how to determine the target on the charts. I am always keeping an eye out for this pattern on weekly stocks or futures charts. I'm looking for an upward movement, then stagnation that lasts for 5-7 weeks. Once I identify such a formation, I switch to the daily chart for a more detailed analysis. I personally consider the flat-based pattern's stagnation as a very strong sign of a security's strength. During this stagnation, stocks or futures are charged for further upward breakout. To illustrate, I'll share my own very powerful technique for applying the flat-based pattern in the stock market that allows you to see that large market powers are in the game. For this purpose, we will use the stock chart of a single company along with the S&P 500 E-mini futures chart. The S&P 500 index is a market capitalization weighted index of the 500 largest US companies. This index chart reflects the current general market conditions in the US stock market. If it drops, most company stocks also decrease in value. If this index goes up, most US company stocks go up with it. And now the technique. First, we observe on the weekly S&P 500 futures chart that the general long-term trend is moving up, but in this certain area the price is moving down for several weeks. Second, on the weekly chart we need to find a company whose stock price remains flat rather than moving downwards. This is the indicator showing that big capital is getting ready for a significant increase in this company's stock value. While most major American stocks are dropping, the price of the company we have found stands still. This means that investors are buying it at a certain price point. When the market reverts, such a company's stock price will rise faster and higher than the rest of the market. Now let's see this pattern in action in real-world market conditions. This is a weekly chart for heating oil. Pay attention to this area. This is exactly where I start searching for the flat base pattern. In early November 2017, the price began to trade within a certain range. 5 weeks later, the perfect conditions were created for the flat base pattern. Let's see how this stagnation looked on the daily chart. Here are the bottom and top trend lines of the stagnation itself. You shouldn't try to enter the trade before week 5 ends. Flat base formation lasted 6 weeks. According to common rules, the entry point was slightly higher than the highest price during the pattern formation. And here is the entry point according to my two-stage system. My system is based on the repetitive action patterns of big capital, which I call invest patterns. I identify these patterns at the first stage and use the technical analysis and price patterns strictly at the second stage. In my Twitter feed I post fresh market insights that can help you make better trading decisions. There I also post my recent big winners in stocks, futures and some currencies. There you will see the stocks that I select based on my custom analysis method, when I see the potential for a big trend movement in them. For each security I show my low-risk entry point a few days before a strong trend begins. The stocks I select very often grow in price by 50%, and some of them may even double their value in just a few weeks. You should see this to make sure that price action in the financial markets is indeed predictable, and understand that if I can find out so precisely and well in advance which stocks go up, then you can find this out too. So watch this video to the end and then check out my Twitter feed to see how my forecasts prove to be real-world market movements worth millions of dollars. Let's go back to our example. A stop loss could be placed either here or here under a higher short-term low, or after closing this day bar where the breakout took place, we could move the stop loss to the same point where we entered the position in order to reduce the risk of loss to zero. I determined the approximate target on weekly charts, taking into account the distance traveled by the stock prior to the start of stagnation, and add this distance to the upper level of the stagnation period. On the way to the target level, it is necessary to carefully monitor the price behavior on the daily chart and use tight stops. Now I will tell you how to make sure that big capital is going to move the price upwards. Pay attention to these two curves. The lower curve represents actual commercials net positions. Commercials are the largest players in the futures market. They provide weekly data on their market positions in the weekly COT report. This indicator's curve reflects their net positions. When the curve goes up, they buy. When it goes down, they sell. Look, during the heating oil price stagnation, big capital began to buy. Bingo! That's why the flat base pattern worked perfectly. The upper curve is the Lexman algorithm curve. This is my own development. I was able to mathematically model the logic of commercials behavior. When real big capital builds up its position, my algorithm shows that this is exactly what is happening. The algorithm almost completely duplicates the commercials behavior in the futures market. At this stagnation, the Lexman algorithm, along with the commercials, clearly shows that large market powers are buying heating oil futures, which means prices will go up. But there are no commercials in the stock market. Therefore, to understand what big capital is doing in this or that company stock, I developed and constantly use the Lexman algorithm. Knowledge without practice is useless. Therefore, with the utmost dispatch, right after watching this video up to the end, accomplish a simple practical task that I have prepared for you on my Instagram. It will allow you to go straight from theory to action. So, as soon as you watch this video, just go to my Instagram page, check what I have prepared for you there and become a successful trader faster than others. Below this video there is a hashtag for you to quickly find that practical task, and you can use my Instagram page as a source of your daily motivation. I post many helpful things there and links to some valuable free stuff that I have. Now let's move on stocks. This is the Visa stock weekly chart. In approximately mid-March 2017, after a good upward trend, Visa stock entered a flat base. The Lexman algorithm showed that big capital was in the game. Now let's apply the technique I mentioned in the beginning of the video to see how the S&P 500 E-mini weekly futures chart behaved at the same time. It dropped, while Visa stock prices stood still. So we have two weighty signs that big money is in the game and preparing for a breakout. Let's have a look at the daily Visa stock chart. This is a perfect flat base pattern. The entry point could be either here or here, just above the high bar on the day before the earnings report at the level of $90.80. The company published its earnings report on April 20, generating a huge volume breakout. It remained above the breakout line for several weeks and then moved up. Now let's take a look at FedEx stock in October 2016, showing stagnation on the weekly chart. The Lexman algorithm showed that big capital entered during this stagnation. At week 5, we also had to be ready to enter this subsequent trend movement after a high volume breakout. Note the fact that the FedEx stock value dropped quite a bit during this period and stayed flat, while the S&P 500 index had a strong drop from August to November 2016. And here we have the daily FedEx stock chart. After earnings, the stock opened with a gap and began to form the flat base pattern. On the weekly charts, the Lexman algorithm showed us that big capital entered the stock here and bought out stocks from everyone who wanted to sell during this period. Let's mark the upper trend line and the entry point at the level of 177, the option for the stop here or here. Increased volume breakout is followed by a retest that could knock you out if you put a stop at the break-even too early. And this is the follow trend up to $200. Let me know if this video is helpful. Leave your comment below. Let me know if you want more videos about technical analysis of the financial markets. And if you enjoyed this video, give me a like. I need this support from you. If you got value from this video, please do me a favor. Just hit the share button below this video to share it out on your networks, Twitter and Facebook. The more you share this message, the more people will be grateful to you, especially me, because it will help my channel to grow faster, and I'll be happy to give more value to you in my videos, so please share it. Don't forget that I've prepared a special task for you on my Instagram. It will help you in turning trading knowledge into a practical skill. You can also use my Instagram page as a source of your daily inspiration. Just check it out and you will see for yourself. If you want to know how to predict prices in financial markets and make huge gains with this knowledge, click the link in the description to check out my free training, Insider's Hack Number 1, How to Predict Prices in Stocks and Commodities with 95% accuracy. My method is based on real actions of large market powers, because to make right trading decisions, you've got to follow the direction of big money. And in this free video training, I'll show you how it works. If you are serious about becoming a successful trader or investor, make sure to sign up for this training right after watching this video till the end. It's absolutely free and it's extremely valuable. So use the link in the description or go to my website investwinners.com. Click this button, enter your email and name, and I'll send right to your inbox the link to access my training for free. You also may be interested to discover membership options that I have. Members of my website receive my weekly report featuring stocks that are ready for a big market move according to my analysis. We catch big winners every single week, and you can check our recent big winners on Twitter right now. In my Twitter feed, I also post fresh market insights that can help you to become a better trader. Just check it out. Make sure to subscribe for new videos every single week. Thank you guys for watching. I'll see you in the next video. Happy trading and be smart. Follow the direction of big money.